Okay, guys, the IMF demands that El Salvador prohibits the accumulation of Bitcoin in the public sector. This is a news that matters and have been published some hours ago. At this moment, already the United States, the President of the United States, President Trump, is talking in front of the Congress. Yesterday, the IMF, International Monetary Fund, issued a new request under this agreement, presenting several documents, including an update to the staff statement and a statement by the executive director for El Salvador. And they said that risks related to Bitcoin are being mitigated. Well, the news is, of course, longer, therefore I'm not going to read it, but we're talking what impacts this very important report may have, especially for Bitcoin and Bitcoin holders. The IMF's request to restrict Bitcoin purchases by the public sector in El Salvador could have, of course, a notable impact on Bitcoin. Why? Especially considering the ongoing bearish trend that we have at this moment, or better, the ongoing volatile and strong bearish trend and the current market volatility. Here's how this news could influence Bitcoin in the coming days. Number one, we will have a potential negative sentiment. That means that the IMF's request could be perceived as a step back for Bitcoin adoption, especially in a country like El Salvador, which was one of the first to adopt Bitcoin as a legal tender. And the move to restrict the public sector's involvement in Bitcoin could signal to the market that institutional and governmental support for the cryptocurrency is waning. Now you know. I said again, the commercials. Look my other videos, COT report. Commercials. Who are the commercials? The government, meaning the news, or this news has been released some hours ago, but the commercials have started to sell Bitcoin already 3 or 4 weeks ago very heavily, and among them also the government of El Salvador. Some of them are selling, some of them are not buying anymore, and some of them are hedging themselves short. This may result now in negative sentiment, possibly driving further price declines, especially for those who were hoping to see more widespread adoption of Bitcoin as a national currency. That means now the governments who are holding Bitcoin, they have limited restrictions to buy Bitcoin anymore. That is, of course, hurting the supply-demand of Bitcoin. Number two, they are hedging themselves massively short, especially in the future markets, Bitcoin future market. That means they are going short in case the Bitcoin price is falling, that they don't suffer too much losses. Therefore, they sell also Bitcoins. That way they gain the profits on the bearish trend and accumulate it to the possible losses they have, or also to the winners. Number two, we will have a risk perception and volatility, means Bitcoin has already been volatile with sharp price swings, as I said in my last videos, and last video especially. Therefore, selling or buying at 0.5 or 0.61% Fibonacci is not working anymore, but instead a lot of people are buying or selling the deep Fibonacci levels at around 0 to 5% or 10%. And therefore, the IMF's action might amplify concerns about Bitcoin's long-term stability, particularly in countries that have shown interest in incorporating Bitcoin into their financial systems. Now, the public sector restrictions could be seen as a warning to other nations considering similar moves. For example, African or some Asian companies, or also Eastern European Far Eastern countries, like, for example, Korea, South Korea. So the public sector restrictions could be seen as this warning, as a warning sign, which could, of course, dampen enthusiasm for Bitcoin. And that cause increases more volatility. Then we have very strong whale activities and on-chain dynamics. The ongoing whale activities, for example, there is a good guy who is called Ki Young Ju, and he noted and who plays a big role in Bitcoin's volatility, that the whales are of course responsible for that, and the whales are the commercials themselves. Also the Bitcoin miners who are selling and hedging themselves short because they're expecting that the Bitcoin price will dump much more deeper. And of course, all these facts are dominating the price movements. However, if larger investors perceive the IMF's request as a risk to the future value of Bitcoin, for example, BlackRock, MicroStrategy, and so on, start to buy Bitcoins, especially at these levels, then what will we do? We sell, we wait until the 5 to 10% Fibonacci levels upsides has been reached, and we sell immediately. As long as they buy, we sell. And this strategy has been very profitable among the last 4 or 5 years, very nicely, and with immense tons of profits. So, meaning we wait until they get the prices higher and higher, and then what we do is we just sell, and the market exactly follows what our strategy has been calculated. That's all. We have also a global impact on Bitcoin's institutional legitimacy. So if the IMF stance becomes a template for future negotiations with countries who use or which using Bitcoin, it could create a broader environment of skepticism, meaning that the amount of skepticism around Bitcoin's role in government-backed finance will increase. Why? Because it seems that Bitcoin is not anymore decentralized. And exactly this could affect institutional investments, causing further bearish pressure. Why? Exactly like the fiat money markets. Each time Fed says something, the markets fall. On the other hand, we have also the long-term market responses. So on the flip side, the fact that the IMF acknowledges mitigating risks, as they said in their report, could suggest a more cautious and controlled approach toward Bitcoin adoption rather than an outright rejection. It means that they say, hey, guys, you are not allowed anymore to buy Bitcoins, or you can adopt some way. So they are going to give commands, and that's exactly what the market doesn't want to hear or to listen to or to see, and that may suggest that the IMF sees Bitcoin's role as a potentially volatile but manageable asset, which might stabilize the market over time, once the dust settles, the market falls deeper and deeper, and then at very low level starts for a consolidation, a long-term sideways, but on the lower depots. Maybe the market, for example, goes below 30K or even 20K or 5,000 from the price of now. And then what happens then? They stand there for 1 year, 2 years, 10 years even. It can be possible. So we have a very bearish trend impact, given that the market is already in a bearish trend, and this news of course could amplify existing downward momentum, bearish momentum, especially if there is a continued lack of strong on-chain activity. The price fluctuations you are seeing, that the price has dropped, for example, to 78,000, rebounded back to near of 90,000, then in 1 day. Then yesterday again 10% down to 82, 83,000, and now up again at 87,000, and so on, could become more pronounced, especially if larger market participants start pulling back based on these developments, meaning that they want to keep this volatility in control, and this control error managing the volatility happens when the market falls down very strongly and the bearish pressure is very strong. So overall, it's likely that Bitcoin will experience more short-term volatility, like we have it at this time, potentially with further downside pressure, bearish pressure. And if more countries take a similar stance to the IMF, and they will, longer or soon they will. However, the longer term effect will depend on a broader market sentiment, government reactions, and any additional shifts in on-chain data or whale activity. And last not least, as I said, the Trump trade, it won't happen too soon. So maybe it can happen at the end of 2028 or 2029 or maybe later, but surely not in the near term. All right? So have a good time.